What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 35. It's November the 29th, 2023. We made some trades today, so let's get into it. All right, so we got a lot to talk about today. I took 31 trades, so let's go ahead and just jump right into it. So number one, always remember to avoid higher lows at the top of a range. Now, right here at trade number one, I went long based on the higher low, which is a good strategy per se, but whenever it comes to the top of a range, you always got to make sure that you avoid higher lows that come up there, because I can't really recall too many scenarios where I've taken a trade like that and it's actually worked for me. Most of the time, it doesn't work for me. So it would just be better for me to go forward into the future and try and avoid that trade by any means necessary, because it usually doesn't pan out the right way for me. So then we come back down here to trades 2 and 3. Now, we were trading in the range, which is pretty much the strategy that I was using right here on 2 and 3. So if we read the notes, it says, I did a good job by going long at the range bottom, but I need to give my trades some room to breathe. And I say that because my normal stop would have been 13 points below, but I got stopped out for 10 points on this one because I moved my stop myself. And I just felt like, okay, the market's going against me. Let me get out while I still can. But that's a good idea to have if I take a trade that's a little bit riskier. Like maybe I take a C plus setup or a B plus setup. Yeah, you can tighten your stop on those because they have a lower likelihood of actually working out for you. But when it comes to those best setups that are your bread and butter, you got to use the regular stop that you would normally use and let your trades breathe, because more than likely they have a higher chance of playing out the right way if you give them the right market conditions. You don't want to squeeze the trade too tight and not give it a chance to actually succeed before it does. So that's very important. And that's really the biggest lesson I learned right there at 2 and 3, because I went long here twice. I should have been good. I should have been able to make profits as prices came back up to the top of the zone, but that's just not what happened today. So then we come back right here on trade 4. I kind of got a little frustrated after 2 and 3 were both long trades, but neither one of them worked. So on 4, I shorted the range because I'm like, oh, okay, we made a lower high right here. We finally broke out of the overall range that we were trading in, so we should be moving back down to at least come and test this wick right here, which is a good idea to have. But when it comes to trading a range bound market, I don't know about other traders, but for me, I'm just not a breakout savant, meaning that if it's a breakout to the upside, I shouldn't be trying to go long. If it's a breakout to the downside, I shouldn't be trying to go short, because neither one of those are really my bread and butter trade, and it's not something that I study enough to actually use in a real market. So I didn't realize that I was shorting the range right here at trade 4 because I was kind of caught up in my emotions at the time. But when I look back on it, I'm like, wow, yeah, you definitely don't want to do that. But always remember, shorting the range is very risky. And what I should have done right here instead was just re-enter the long trade once prices had a false breakout to the downside and then immediately spike back into the zone. That should have been my long trade right there at trade 4. But I learned my lesson, and that's all I can ask for. So then we see prices come back up to the top of the range once again. That created this lower high right here, followed by the second lower high right here, right above trade 5. So that's where I shorted. I shorted here after I saw the first lower high after prices rejected from the top of the zone. Now that right there is the textbook way for me to trade a zone when I'm looking to go short from a consolidation range. Perfect execution, perfect setup. The only thing I would say is that I left a little bit of points on the table by getting out a little bit early right here instead of getting out towards the actual extreme lows of the range, and I left about 10 points on the table. So just got to work on having my exits get a little bit better, but I'll take this trade any day, every day. I feel like I did a decent enough job on that one. Now that brings us along to trade number 6. So at trade number 6, I went long right here based on the higher low, but the prices broke right past the higher low and then pretty much turned around exactly where my stop was. Now, it really wasn't anything down here to let me know that that would happen when I was in the moment. But now that I look back on it, these wicks down here actually line up. So we have 1, 2, and 3. So if anything, if there was going to be a pullback point, more than likely prices will come back, retest that wick, and then continue moving up. But I didn't really realize that at the time, so I'm not mad about it. But what I did realize right here on trade 6, if we read the notes, it says the smaller higher lows kept getting broken through today. And that's very interesting, because when I look at higher lows, sometimes I don't look at them in like detail where I'm looking at every single wick and every single candle. I'm just looking at the general area and what it looks like. And in my mind, I'm going through a process. I'm looking at it and I'm saying, is it right or is it not? If it's right, I'm trading it. If it's not, I'm skipping it. But one of the new things that I learned is that whenever the red candle in between the green high or low is actually a little bit smaller than normal, it just gives the selling a little bit more of an opportunity to actually break past those prices, have a false breakout, and then come back and reclaim that level. So it doesn't mean that you don't take that trade, but you just got to understand that it has a higher probability of ending up in a loss. But it doesn't mean that the war is lost. It just means that the battle is lost, because if prices break back above that price one more time at the higher low, you can take that long trade and take it back up to the next level of resistance. And that's pretty much the same idea that I had at trade 7. Took the same trade from trade 6 and re-enter as prices spiked back through my original entry price. Now this was a good trade, a good entry, but the management of it just wasn't my best, because trade 7 and 8 were two entries that came on the same trade. Trade 7 was entry number 1, trade 8 was entry number 2. Now I had the right idea about adding to my position because I saw that the trend was up and I saw that we were moving up to a major level of resistance above. So I'm like, okay, cool. I just want to ride prices up to that level if I potentially can. Now, what I should have done right here was go long at 8 where my stop was. So my stop was right here at the break even level for the entire position when you add up 7 and 8 together. So I was this goes back to what I was talking about earlier when I say that I'm not giving my trades room to breathe. So even though I'm adding a position, I still got to keep my stop at a generous level to allow my trade a little bit of time to keep running if it needs to, because the same place I got stopped out was the same place the pullback ended and the move continued. So if I do want to add to a position in the future, I need to make sure that I add from good prices, and I think that's what the note says. It says I should treat add-ons the same way I would treat a new entry. If it was a new entry, more than likely I wouldn't go long at the highs, because that's just not me. But I kind of get lulled to sleep when I have profits in my account and I'm like, oh, okay, I can afford to go long right here. It's all good. I see where the overall market is going, so let me just get in. But that's not the case. You always got to make sure that no matter where you get in, no matter how many add-on positions you add, you still got to make sure that you get in from the right levels and the proper levels, and that's super important. So then we come back on trade 9, and I went long here based on the higher low, and this is yet another example of a small higher low that was broken through. So notice how this higher low right here, if you look at the red candle in between these two greens inside of the circle, this red candle is extremely small. So it doesn't mean that the higher low won't pan out, but it just means that it's a higher chance of prices breaking past that level and then breaking back above it to see the up move continue. That's what we saw at 9 and 10, as well as what we saw at 6 and 7. So on trade 10, as prices spiked back above that higher level entry price, I got back in and then took it back up to the next level of resistance above, and pretty much got out at the same place that I shorted from when I shorted from trade number 5. So that right there, that was, oh no, we still got 2 more trades left, 11 and 12. Okay, cool. Now right here, this isn't marked up, but let's call this one 10A. Right here, I also went long based on the higher low, expecting for prices to come back up and test the top of the zone. But when I saw that they were kind of fizzling out and I saw these wicks up here, I just got out for break even, and glad I made that decision, because I definitely would have got stopped out if I held on to that trade. Now we come back down here to 11 and trade 12. Now on 11, what I learned right here is that I need to remember to use caution when I'm buying higher lows in a downtrend, because this is very risky. The higher low strategy is very legit and is very successful, but you got to understand that the way that it's used changes in different types of market scenarios. If you're in a downtrend, you will see higher lows that get formed, but you don't want to go long based on those higher lows, which is what I normally would do. But instead, I should think about going short, because anytime a downtrend is strong, a higher low just has a higher chance of being broken through. That's just how the market works. So whenever I see a higher low in a downtrend, my first thought should be, let's see if that higher low can get broken, instead of my first thought being, I'm gonna take the higher low anyway, even though I see the downtrend. That's not what you want to do, because even though you believe in your setups, you still got to make sure that you apply it at the right times in the right places in order for you're set up to have a higher chance of being successful. So trade 11, I went long right here, but I realized my mistake, and then I came back on trade 12 and was like, okay, we were in the downtrend, we had a higher low, we broke past it, and then we came back to retest that level that we broke out from. So that's where I shorted at trade 12, and then just took it back down to the previous lows that were established. So overall, you know, on part one for today, I took some losses. I make some bad trades, but I was able to make a lot of that back. Still ended up with a little bit of losses after part one. So let's go ahead and move on to part two. So that was 5 through 12. So let's pick back up at trade number 13. So 13, this was a good long entry based on the higher low. And this goes back to what we talked about before about letting my trades breathe. I can't be scared because I'm scared. Usually I get scared when I'm already down on the day and I'm looking at a really good trade, but in order for it to work, I got to give it room to breathe. That means that I have to accept the possibility that this trade could turn out as a loss, which is going to put me into a deep, which is going to dig me into a deeper hole. So a lot of the times when I am down and I'm in a good trade, sometimes I might bring my stop up a little bit prematurely because I don't want to give back any of the profits that I already made. But that's just not how I should really think about things. If anything, I should just hold my best trades no matter what scenario I happen to be in. Whether I'm up by a lot or down by a lot, that has nothing to do with the trade that I'm in at that time. I need to manage that trade for what it is and make the best decisions that are possible and worry about what's in front of me and not what's already happened. So that's very important. And I got to get my mindset right because I feel like as far as strategy goes, my strategy is good, but my emotions just keep taking me all over the place and allowing me to make bad decisions when it comes to actually executing this trading plan. So I got to get that part right, and that's on me. I got to take accountability for that. So then we move on to 14. Now 14, this was really the only trade today that I just didn't understand what exactly went wrong, because on this one, I saw everything that I wanted. I saw overall downtrend. I saw a higher low that got broken through at 13 after we saw lower highs get established once the higher low got made. So once a higher low comes right after, so once a lower high comes right after a higher low, that pretty much invalidates whatever idea I had about going long right there at the higher low support, which means that I should consider the higher low support being broken through. And if that happens, I wait for prices to come back, retest the breakout level, and then I short it from there. Now on 14, I'm still just looking at this entire setup and I can't figure out why it didn't work. So I still think that I just need to study 14 just a little bit more, and when I figure it out, I'll come back and let you guys know. But I don't know, man. That's a head scratcher right there. So we move on to trade 15. So if we look at what happened at 14, maybe this could give us a better idea about what went wrong. We did have a higher low in comparison to where we came from these lows where I shorted to at trade number 12. Because I think the lows down here were 70, and then the lows at 14 were 75. So technically that's a higher low. So I mean, if I'm shorting against a higher low, now it kind of makes a little bit more sense as to why that didn't work. And it makes more sense as to why 15 did work, because at 15 I saw a series of higher lows get established. So this is higher low number 1, and then this is higher low number 2. And I just went long right here as prices came back to retest the higher low level of support, and took it not all the way back up to the top of the range because I wasn't quite sure if they could make it, but I did take it all the way back up to the opening price for this breakdown candle where we sold off on high volume. So then after trade 15, prices came back, retested the higher low from 15 once again, pushed up, made a new higher low at 16. So I used the higher low strategy, went long right there, and just took a quick scalp back up to the top of the blue line to pretty much finish off the trade that I had from 15. So at 15, I went long right here, took it here, came back at 16 and went long at the same price I closed my trade out from before, and picked up the rest of the points on the table and took it back up to the lows of resistance from this overall range that we used to be in. So after 16, we finally break back into the range, come back, retest it. I wanted to go long right here based on the retest of this range right here, seeing that the trend was up and we're coming back to retest it after we hit a major level of resistance. But I didn't see the higher low, so even though I felt like I knew where the market was going, I still had to be disciplined enough to follow my strategy. So I'm proud of myself for being able to have discipline right there. So then we finally move up, create a new higher low at 17. So I went long right here, expecting to take prices up to the top of the zone, and that's pretty much what I did on 17. So right here, this was a pivotal junction and a pivotal point on the chart for me, because I was down by like, I think 40 points before trades 12 through 17 happened. So I was down by a substantial amount, but then I was able to make all of those points back on trades 12, 15, 16, and 17. Now it's pretty much back at break even, minus 5 points. And for me, that's close enough where I'm like, well, to me, that's break even. So I had a choice right here, and I was like, Ty, you struggled early. You did a good job making it back. You could call it a day right here, figure out what went wrong early on and correct those mistakes, and then come back tomorrow and then just try and run it up. But it was another part of me that said, well, if I'm back in the groove and I'm back in the flow of where the market is going, I might as well just keep going and get myself back into profitable territory. So that was the mindset I had. So let's go ahead and talk about trade, part number 3, because I continued to trade throughout the rest of the day. So let's pick back up on 18A and 18B. It's kind of hard to see, so let's zoom in. Now on 18A right here, I went long here twice based on a higher low, had 2 break evens right here. I'm not mad at that. You know, I did the best that I could in that scenario, and that's okay. But what I didn't realize from 18A and 18B was that we were really trading in an overall consolidation range between this low right here and then this high right here. You could box that up, and we stayed in that box for about 30 minutes. Now that affected me on trades 19 and 20, because I saw how strong the overall trend was, you know, going back to part 2 and how we were moving up. We broke out of the range. We never came back to retest the range, and we just formed support way above the range. So I'm expecting for this to turn into a trending day where the uptrend continues until the day is over. But that just wasn't the case. And even if it was the case, I still got to go long from lower prices, because if you look at 19 and 20 right here, I went long towards the top of the zone on both of these trades and got stopped out at the bottom of the zone, right where prices turned around each time. So that's on me right there. You know, I know for certain that I'm never supposed to buy high, but I still ended up doing it right here, and that's on me. I got to get better at doing that. I got to make better decisions. That's all on me. You know, I can't blame the market for that loss. And then we come back to 21. I went long right here based on the higher low, but I quickly got out of it once I realized that I was buying near the highs of the day. I already did that on 19 and 20. So I said, okay, if I do the same thing on 21 and take another loss, that's definitely not a good thing. So let me just get out while I still can. So that was 21. We come back to 22. We finally had a bounce from the lows of the overall zone we were talking about. We had the bounce right here, formed a higher low, formed higher low number 2, came back to retest it. Then I went long and took that all the way back up to the same entry price that I got in from at 21. So that was a good trade right there. Not too bad. So that brings us to 23 and 24. Now, the idea right here was the same as the trade from 21. I went long at higher prices, just expecting for it to be a trend day. So I'm like, well, I can get in at any level, but that's just not the scenario. The only difference here at 23 and 24 was that, unlike 21, where I got out quick when I realized my mistakes, on 23 and 24, I was super stubborn, and I was like, nah, I see which way the trend is moving, so I'm holding this trade until I see the uptrend that I want. That never happened, and I ended up having to take 2 losses right there. And, you know, sometimes when it comes to trading, it's like that. You know, you see all the opportunity in front of you, but if you don't manage that opportunity the right way, you can have all of this potential and still end up taking losses. And that's pretty much what happened to me today. But it's something that you got to learn from, and something that you got to get better from, because the worst thing to do is take losses like I did today and then not get better and not learn. That's terrible. So let's move on to trade 25. So once the uptrend finally broke and we came all the way back down to retest this measured level of support, I shorted right here as prices came back to test that break that just happened, and then I took prices all the way back down to the lows of the range right here at the blue line. So that was a good trade right there. You know, looking at it, I'm thinking to myself, I should have held that trade, but that's just not my style. You know, prices went from one level to the next level. It gave me the profits that I was looking for, so I maximized that. I closed it out, and I feel like I did the right thing right there. So then we come back to trades 26 and 27, and these trades, this was just so frustrating because I had the overall direction of the market correct. I was short from 25 and I was short on 26 and 27. But it doesn't matter if you're trading in the right direction if you have a bad entry. You still got to make sure that no matter what you do, you get in from the proper prices. So when it comes to me shorting, the same way I don't want to buy high, I also don't want to short low. If I'm going to short it, I need to short from higher prices. And looking back on this scenario, the best price was to short from this high volume candle that occurred right here, where this long tail candle wick was located from. You see the volume poking out right here, right? That's for this candle right here. So if you look at where that candle closed, that's where this red line of resistance is drawn at. We were never able to come back and break past that level. So that should have been the area that I was shorting from every single time. But I kind of just messed that up. I shorted too low, and the same places that I got stopped out at during this entire upswing were the same places that prices turned around and the downtrend continued. So that's tough, man. But it's a lesson that I had to learn, and hey, I'm trying not to ever make that mistake again if I can help it. So that brings us to trades 28 and 29. Now, this whole junction had so much potential, but I traded it wrong. So let's talk about it. Now, 28, I shorted here based on the break of the higher low, which was a good idea based on everything that I saw. I saw a overall downtrend, a higher low get formed, and then a lower high get formed right after. That led to prices breaking back down below the support level from the higher low. And then I looked to go short as prices came back to retest that level. That's a great scenario, but sometimes it's just not going to work for you, and you're going to be a little bit too early. And that's okay. I can take that loss with stride and take that loss with pride. But then I came back on 29 and I shorted after I got a clean break of the higher low. And I had great profits on this trade, but I didn't lock it in, and that really hurt. Because if you look at where I got short from 480, and prices came all the way back down to a low of about 456. So I could have caught my normal 20-point scalp target that I'm looking for and been fine and dandy right there and been able to look for the next best opportunity after that occurred. But you can't see it on the chart, but yesterday's closing price was about I think it was 46. So it was about 14 points below the lows of this screenshot right here at 460. So I was aiming for that level, and I saw how strong the downtrend was going all the way back up to the highs we made at 630. So I said, oh, okay, if we have this much momentum moving all the way down, more than likely we're coming back to test yesterday's closing price, which is a good idea to have, but you always want to make sure that whatever trade you're in, the market confirms the idea that you had. You don't just want to get in because you felt like you should. Gotta wait for confirmation, because if you don't, you could risk yourself. You could open yourself up to a whole lot of risk that you really don't want to actually have to deal with. So it's important to make sure that if you have an idea, the market has to confirm it. And that's why I say 29 hurts so much, because at this point in time, I was about maybe 30 to 35 points away from being back at break even. I was trying to get it all on one trade instead of just taking what the market gave me. So if I would have took the 20-point profit target that I had right here, I would have been maybe like 10 to 15 points away from break even. And I'm not saying that it's guaranteed that I come back on 30 and 31 and make good trades. But what I can guarantee is that if I take profits at 29 like I should have, I would be in a different mental mind frame, and I would be able to maybe see the market from a much more open-minded perspective, because I have no stress and I have no emotion that's fighting against me saying, nah, Ty, it has to do this. You know, when you take a loss like that, where you know you should have got your profits, it messes with your brain, and it makes you say, man, I feel like I got to make that trade back now, so I'm going to take the first trade I see. And that's pretty much what I did right here at 30 and 31. And taking the first trade that you see is not always bad if the first trade that you take makes a whole lot of sense after you got out of that loss that you just took. But that's not what happened for me on 30 and 31. I shorted right here expecting for the higher low break to actually be successful. Basically expecting the same thing from 29 to happen, because I'm like, okay, we broke past the higher low. We just came back up to retest it. We moved away a little bit right here, but then we finally came back and broke past the higher low again. So I'm thinking here that we're on our way back down to retest not only the lows from this wick from before, but yesterday's closing price at 446. So I shorted right here at 30. But what I ignored was the fact that We came back down, tried to test yesterday's closing price, didn't do it, had a huge momentum candle to the downside that immediately saw follow through to the upside on a bullish engulfing, followed by a new higher low that got made. And then all we did was come back to retest that higher low level, and then we went long from there. You can't see it right now, but if you look at what happened after these trades were over, the market moved all the way back up to test that range that we were initially trading in throughout the entire session a little bit earlier. So this was a move that I feel like I should have been able to participate in, because everything lined up and it gave me the perfect higher low setup. It's a higher low setup that I've seen multiple times. I have a lot of notes that look just like this exact variation, but I still played it wrong because I was just in a bad mind frame, and I'm trying to revenge trade and make back what I felt like I should have made at 29, and that's just not what you want to do. So that was my last trade of the day at 30 and 31. Took 2 losses right there, and not only did I have to call it a day because the market was about to close in a few minutes, but also because I hit my loss limit and I just wasn't feeling it. You know, I had so many opportunities to do the right thing, but I came in today and, let's be honest, I just messed it up. Like, I don't even know how to put it any other different way. But I think the good part about it is that I'm able to go back over these losses, understand where I went wrong, understand the things that I need to work on and get right. So it's up to me to be able to just put in that work, make sure I correct all of these mistakes, come back tomorrow and do what I know I'm supposed to do. But I can say that the silver lining in the cloud was I traded the smallest contract size that I could. I traded 1 contract today and nothing more than that on any of these trades at all. So even though I did take losses, the losses were, I would say they were reasonable. I'm not just gonna say it was a good loss, because these were some bad losses, but it could have been worse. It's pretty much what I'm saying. So I think I just need to focus on this line right here. If we read this, it says, large losing days like this, they can't happen. I have to hold myself accountable and make better choices, because at the end of the day, my results are 100% based on the decisions I make. It's nobody that has the account login to my account. Nobody can come and make trades for me. Nobody can click the button for me. It's these decisions that I make are all the way up to me. So if I want to make bad decisions, that's on me. If I want to make good decisions, that's also on me. So I just got to get back to the lab, get these trades right, and just practice a little bit more, come back to the market and do the things that I know I'm supposed to. So today wasn't the best day, but I still survived, still got a funded account. I'm still in striking position for all the goals I'm trying to reach. So I just got to get over this loss. You know, it sucks. I'm not going to lie. I'm a little bit frustrated, a little bit irritated, a little bit disappointed too. But sometimes in the market, that's just how it goes. But what's important is how you react to your losing days. You can go into the dumps and you can say, oh man, I don't know what I'm doing. It was just working for me last week. Now I can't get anything right. Or you could pull yourself up by your bootstraps and say, look, I took losses. I understand what I did wrong. Now here's how I'm going to fix it. And this is what I plan on doing. So that's the mentality I want to use. I don't want to just beat myself up about it. What's done is done. I don't have a time machine to go back and change what's already happened. So the only thing I can focus on is the future. So it's up to me to make the right choices tomorrow. And I believe 100% that I can come in and do that. All I need to do is follow my trading plan and stick to the rules that I already know and that have already given me success over the past. And I should be perfectly fine. So I appreciate you guys for tuning in with me today. I hope you learned a lot, because I definitely did. You know, it's a tough day, but hey, you got to survive days like these and get through them. And that's exactly what I did. So I'll be back tomorrow on November 30th, ready to run it back again and get this right. But until then, you guys have a good one, study hard, and take it easy. Dang.